Get ready because the news cycle is absolutely electric right now, and we've got the pulse on the stories that matter most. The pace is furious, the updates are critical, and if you miss this, you're missing out. We're diving deep into the trends shaping our world, bringing you the insights you need to stay ahead. From market-moving financial reports to the unseen forces driving massive industries, this is your essential download. We're talking about seismic shifts, game-changing technologies, and the companies at the very epicenter. You absolutely cannot afford to miss these updates. Stick around because the future is happening now, and we've got the inside track. Let's get into it. First up, the financial world is buzzing, and one company is at the absolute center of attention. We're dissecting the unprecedented market fascination with a tech giant that's not just performing, but redefining what it means to be a market leader. What's driving this obsession, and is it sustainable? We're breaking it all down. Next, we're pulling back the curtain on massive financial dealings. How much of a tech titan's success is really down to a select few? We're revealing the details of who's spending big and what it means for the industry's future. This is a story about concentrated power and its implications. Then, we're looking at the long game. What would a significant investment in a forward-thinking company a decade ago be worth today? We're crunching the numbers and showing you the incredible trajectory of growth that's turning modest investments into fortunes. Prepare to be amazed by the power of foresight. And finally, we're exploring the critical infrastructure of innovation. What's powering the next wave of technological advancement, and how is it impacting global markets? We're identifying the key players and the technologies that are set to define the next era of digital evolution. Don't go anywhere. Hit that like button, subscribe to Qualcomm Pulse, and ring that notification bell so you never miss an update. Let's go. Wall Street's Nvidia obsession, a deep dive. Why is Wall Street so fixated on Nvidia? For the financial markets, the most significant event of the week wasn't a political upheaval, but Nvidia's latest earnings report. This quarterly announcement has transcended typical financial reporting, evolving into an event with a fervor comparable to the Super Bowl, complete with dedicated fan watch parties. The excitement is palpable, and for good reason. An investment of just $1,000 in Nvidia shares 2 years ago would now yield a profit of $3,000, with the stock currently up 30% for the year, significantly outperforming the S&P 500's 10% gain. Consistently exceeding Wall Street's forecasts, Nvidia's performance is undeniably impressive. However, this remarkable success has also sparked concerns about a potential market bubble. Even prominent figures like Sam Altman, CEO of OpenAI, have voiced speculation about an AI bubble. Several factors contribute to these worries. Firstly, Nvidia's sheer size is unprecedented. Its market capitalization has reached a staggering $4 trillion, a figure that's hard to comprehend when considering that the world's first $1 trillion public company only emerged in 2018. Now, a dozen companies, predominantly in American tech, have surpassed this mark. This immense size means Nvidia alone accounts for approximately 8% of the S&P 500. Consequently, its performance directly impacts the broader market, making its results essential, viewing even for those who don't hold Nvidia stock directly. On a global scale, Nvidia's market cap represents 3.6% of the world's GDP, a remarkable statistic for a single company that derives half its revenue from just 3 clients. This concentration is a key point of discussion. Secondly, Nvidia is intrinsically linked to the AI industry. The chips powering ChatGPT, Anthropic's Claude, Google's Gemini, and Amazon's various AI products are all manufactured by Nvidia. Previously known for its graphics processing units, GPUs, that enhanced video games, the company has become the indispensable supplier for the burgeoning AI sector. While not officially labeled a monopoly, Nvidia's near-exclusive control over vital AI resources and its substantial profit margins certainly give it a dominant position. It is the primary picks and shovels provider for the AI gold rush. The critical question is, what happens if the AI revolution, as envisioned by industry leaders, doesn't fully materialize? the intense focus on Nvidia intensifies when considering the possibility that the technology it powers might not live up to the hype. Recent negative AI headlines, coupled with signs of economic slowdown, have unsettled investors, leading to a tech sell-off and increased anxiety leading up to Nvidia's earnings report. While AI chatbots have certainly changed how we discuss technology and increased the usage of terms like trillion, their practical, economy-justifying applications are still being debated. The massive capital expenditure by tech giants on AI infrastructure, which has outpaced consumer spending's contribution to GDP growth, raises questions about the long-term viability and return on investment for this AI race. But is this intense market focus sustainable? Stay tuned as we explore the concentrated customer base powering this tech giant's growth. Nvidia's customer concentration, a closer look. Two mystery clients drive nearly 40% of Nvidia's Q2 revenue. Nvidia's recent second quarter earnings report revealed a staggering statistic. Nearly 40% of its revenue came from just two unnamed customers. Filing with the Securities and Exchange Commission, the chip maker announced a record $46.7 billion in revenue for the quarter ending July 27, marking a 56% year-over-year increase, largely propelled by the booming AI data center market. However, the breakdown of this growth revealed a significant reliance on a small number of clients. Specifically, the filing identified customer A as responsible for 23% of total Q2 revenue and customer B for an additional 16%. Neither customer was publicly identified. For the first half of the fiscal year, these same customers accounted for 20% and 15% of total revenue, respectively. The company also noted that four other customers contributed 14%, 11%, another 11%, and 10% of the Q2 revenue. Nvidia clarified that these are all direct customers, meaning they purchase chips directly from Nvidia, such as original equipment manufacturers, OEMs, system integrators, or distributors. Indirect customers, like major cloud service providers and consumer internet companies, acquire Nvidia's chips through these direct channels. This distinction is important, as it suggests that large cloud providers such as Microsoft, Oracle, Amazon, or Google are unlikely to be customer A or customer B themselves, though they may be indirectly driving this massive spending through their partnerships. Indeed, Nvidia's CFO, Nicole Kress, indicated that large cloud service providers constituted 50% of Nvidia's data center revenue, which itself represented 88% of the company's total revenue. This level of revenue concentration among a small client group presents a significant risk, according to Dave Novosel, an analyst at Gimme Credit. However, he also noted a mitigating factor. These key customers possess substantial cash reserves, generate immense free cash flow, and are expected to continue significant investments in data centers over the coming years. This suggests a degree of stability, at least in the short to medium term, for Nvidia's high-demand products. The reliance on a few major clients is a critical factor for investors to monitor as the AI market continues its rapid evolution. The question remains whether this concentration is a sign of market dominance or a potential vulnerability should these key relationships shift. But how has investing in this tech giant performed over the long haul? Prepare to be amazed as we reveal the staggering returns for those who bet on this company a decade ago. The 10-year Nvidia investment payoff, a fortune made. What happens if you invested $10,000 in Nvidia stock a decade ago? Investing in the stock market often hinges on foresight and identifying potential disruptors. Few could have accurately predicted the profound impact Nvidia's graphics processing units, GPUs, would have on the artificial intelligence revolution back in 2015. However, those who showed conviction in the company's prospects, whether in the gaming, automotive, or emerging AI sectors, have been rewarded handsomely. In the span of just 10 years, Nvidia's stock has surged by approximately 33,280%. This means a hypothetical initial investment of $10,000 a decade ago would have transformed into a multi-million-dollar fortune today. To put this into perspective, investing $10,000 in the benchmark S&P 500 index 10 years prior would have resulted in a portfolio worth about $33,400. While this represents a strong return for the broad market, it pales in comparison to the astronomical performance of Nvidia. The chip giant's stock experienced a dramatic acceleration in growth starting in 2023 and has maintained that upward trajectory. Currently, Nvidia trades at roughly 41 times its forward earnings. This valuation naturally invites debate about whether the company is overvalued, particularly if the current AI boom experiences a slowdown. Nevertheless, many investors are willing to pay this premium, especially when considering that numerous other stocks trade at even higher multiples with less impressive growth prospects. Nvidia's dominant position in the AI hardware market, driven by its powerful GPUs essential for training and running complex AI models, underpins its current valuation. The company is widely regarded as the primary, picks and shovels provider for the AI gold rush, supplying the fundamental infrastructure needed for this transformative technology. Its ability to consistently deliver high-performance chips that meet the escalating demands of AI development has solidified its market leadership. The company's recent earnings report for its fiscal 2026 second quarter further underscored its strength, with adjusted earnings per share of $1.05 and revenue of $46.74 billion, surpassing Wall Street's consensus estimates. Although the data center division slightly missed revenue expectations, management remains optimistic about sustained AI infrastructure demand. This extraordinary growth trajectory highlights the power of identifying and investing in companies at the forefront of technological innovation. Nvidia's journey from a graphics card manufacturer to a pivotal player in the AI ecosystem serves as a compelling case study for long-term investors. The company's strategic focus on AI, coupled with its technological prowess, has positioned it as a key enabler of the ongoing digital transformation, justifying its premium market valuation in the eyes of many. Now that we've seen the past returns, let's look at the technology powering this future. We're diving into the critical infrastructure that's fueling the next wave of innovation. The engine of AI, Nvidia's dominance in semiconductor innovation. What technology is powering the next wave of AI, and how is it impacting global markets? Nvidia, with its current market capitalization nearing $4.5 trillion, stands as the world's largest company, delivering substantial returns to its shareholders. Positioned as the quintessential, pick-and-shovel provider for the artificial intelligence revolution, Nvidia designs and manufactures semiconductor chips that are crucial for processing multiple tasks simultaneously, making them ideal for the demanding requirements of AI applications. The company recently announced another quarter of robust performance for its fiscal 2026 second quarter. Its adjusted earnings per share of $1.05 and revenue of $46.74 billion both exceeded Wall Street's consensus expectations. While the data center division experienced a slight miss on revenue estimates, company leadership has indicated that demand for AI infrastructure remains exceptionally strong. This sustained demand underscores Nvidia's critical role in enabling the widespread adoption and advancement of AI technologies across various industries. Nvidia's success is deeply intertwined with the rapid expansion of the AI sector. Its GPUs are the backbone of the computational power required for training complex machine learning models, developing sophisticated AI algorithms, and deploying AI-powered applications, from advanced chatbots to cutting-edge scientific research. The company's ability to innovate and consistently produce more powerful and efficient chips has allowed it to capture a dominant market share in this high-growth area. This dominance is further solidified by its ecosystem of software and development platforms, which enhance the usability and performance of its hardware. However, the concentration of revenue from a few key customers, as highlighted in previous reports, does present a potential risk factor that investors are closely monitoring. Despite this, the overall market sentiment remains strongly bullish on Nvidia's prospects, driven by the fundamental belief in the transformative power of AI and Nvidia's indispensable role in its development. The company's strategic investments in research and development, along with its expanding product portfolio, are expected to sustain its growth momentum. As the AI landscape continues to evolve, Nvidia's technological leadership and its ability to adapt to changing market demands will be critical to maintaining its position at the forefront of innovation. That wraps up our deep dives for today. But before you go, let's quickly recap the biggest stories. And that's a wrap on today's essential updates. We covered Wall Street's massive obsession with Nvidia, the surprising customer concentration driving its revenue, the incredible decade-long returns for early investors, and the critical technology powering the AI revolution. Don't miss out on future breakdowns. Hit that like button, subscribe to Qualcomm Pulse for your daily dose of critical insights, and ring the notification bell so you're always in the know. Follow us on all social platforms to keep the conversation going. We'll see you next time.